This is the first person I've met that's tokenized $52 million in real estate. He's got a great story. Stay tuned. We're going to jump in right now. Hey, Johnny, welcome to the show.
Hey, Mark, thank you for having me here.
Yeah.
Appreciate it.
And the only way I found you, and which is amazing because I know almost everybody in the tokenization space, is that I saw a tweet thread that you put together, and it kind of worked out through time how you came to the position that you're in now, which is that you've tokenized $52 million in real estate. So will you take just a few minutes, introduce yourself, and then discuss that journey?
So I'm a Chinese immigrant, first generation of immigrants. I grew up in China and then moved to UK to study, then moved here in the US. I started my business in 2012 and there was a construction company and then I failed it and I started another business. I failed it. So overall failed three business before I got into real estate investments and developments and then made my success there. So moving forward, long story short, is I develop a lot of properties. Right now, I'm also developing $500 million worth of properties in developments, mostly in Southern California. Manage over $1 billion worth of assets. Purchased an investment bank in 2019. So I got involved in finance and as well, and I do a lot of M&A deals with my investment bank. But I'm always fascinated by this blockchain technology that how it can change the world. So in 2021, I decided to dive into it. Right, that was after COVID. I was looking for new projects, and the developments was on hold because of the time. Then I started realizing the blockchain technology I was actually can benefit real estate in a lot of ways. And then I was trying to look for a project to invest back then, and I guess I was not good of a researcher, couldn't find a project I really liked and that actually fit all my criteria. I was like, oh, if nobody's doing this, maybe I can do this. And I was bored, I had money. I was like, okay, I'll do it. So long story short, from 2021, I wrote my first white paper until today. I've spent over $3 million in legal under compliance, and then to build my smart contracts and the app to make sure everything I do is comply with the law that's written in 1933.
Yeah.
Oh, yeah. And then to make sure everything's legal and then to come with the law, because that's the first thing I want to do to make sure I don't break any laws. So I did that, then I started tokenizing my projects. Then I launched my project, my token, right? It's a security token represent the ownership of properties. I've tokenized 52 million worth of my own properties here on the platforms. Now I'm actually switching the platform instead of just tokenizing my project. I'm also helping other projects tokenize their projects as well. So any other sponsors, real estate sponsors can come to my platforms, tokenize their own projects, and then get access to my user base as well. So my users now is global user base. So for the first time ever, global investor can access US real estate and at a fraction of a cost. And they're at any time they want, they can buy, they can browse properties, they can invest any property they like, then they can trade it afterwards, at the secondary markets, peer to peer for now. And then of course there's exchange you can list on, like in US, you can list on T0, that's ATS, so that's the bouncers, and also supports security tokens. There's a few other players out there, securitized. Yep, that's long story short. That's where I am today.
All right. So I'm just going to kind of go back and rewind a little bit. From what I heard, you had three failed businesses. You said, let's get into real estate because, it's hard to lose at real estate if you know halfway what you're doing, which is true. I've made most of my money in real estate as well. And then you started doing real estate deals. You built that up to about $1 billion. And you decided at some point that in 2021, 2022, that you wanted to tokenize these properties. And what made you go that direction? Was it to be an innovator, or did you see a financial opportunity there?
So it's both, right? And then the problem, as you and I both know, in real estate business is like the real estate is a great investment, best investment on the earth, in my opinion. But there's also problems with it, right? The biggest problem is liquidity, right? And then the liquidity is the biggest problem. When you invest in real estate, you have to hold it for a long time. If you want to sell them, you're going to sell it quickly and it's costly to sell them. And the hurdle's pretty high. You have to have a lot of money to invest in real estate, right? So, and then every time I do syndication through my friends' family and the other investors we have, it takes a long time to close the deals. And then the biggest complaint from them is like, hey, I can't sell my shares afterwards. You have to wait for you to sell your properties, then liquidate, everything, then distribute the money. That's the biggest problem we're having. And then And then, of course, after COVID, 2020 was booming market, but then 2022, look at everything's like, the liquidity cash dries out, people's hard to raise money, interest is high. So, of course, when I decided to do that, I didn't know that happening, but I was looking for, look, blockchain technology does solve a problem that real estate has, and then can make it better. Plus, through all my careers, I've been helping the wealthy people make money, including myself. Right, is investing in real estate. You have to have a lot of money to invest in real estate. So those are wealthy people. Plus, my investment bank. We also help corporations, under institutional investors to matchmaking, help them to broker deals. We make money off that too. So I always been want to do something that's can help the little guys. And then of course, I didn't like the traditional crypto side where you just pump and dump. There's a lot of scams out there. I didn't like that part. But I see opportunity where I can actually make a good use of blockchain technology, which I really like, into the safest investment on earth, in my opinion, which is real estate, to solve a real estate problem, which is liquidity, accessibility for foreign investors. Like I said, global investors never had access to real estate in the US. With blockchain technology, they could. And then also for blockchain, for the Web3 side, now I can provide them legitimate, real ownership in the real world, that they've never had it before. So I see a win-win situation on both sides. And then I was like, okay, well, this is good. And I was trying to research for other people who does the project, so I can investing actually. But I just couldn't find anyone that do it legitimately. And then, because I've seen some projects, I've seen a lot of people just raise money by selling tokens, then they scam the people, or they did it under ERC-20 standard, which is not really compliant with the law. So I figured if nobody can do it, nobody did it legitimate way, maybe there's financial opportunity there for me to solve problems on both sides, also benefit from it as a businessman as well. So I jumped in.
So you jumped in, you saw the opportunity. When you tokenize these properties, are you doing like a Reg D and a Reg S? Is that how you set it up?
Yes. So in US, of course, the laws written back in 1933, the only way you can sell securities, right, legally is through Reg D, Reg S, Reg CF, and Reg A, right? And or you can go public, right? Go IPO. Yep. So now the first chunk of token I sold is just through my friends, family, and I put most of the money myself. And then we did launch a Reg D and Reg S simultaneously together. That was in 2023. We raised about, I think, a little bit more than $500,000. And then for credit investor owning mostly, and then some for investors, and that was it. Now we're actually listed on republic.com through Reg CF. That's the first time ever we can sell to non-credited retail investor.
But it's got to be under $5 million, right?
Yes, under $5 million. You can't do more than $5 million, but you can do every year, right? So, and then next step is you can do Reg A, you can do $75 million.
Well, Reg D is unlimited if you don't accept unaccredited investors.
Yes, but the problem is that there's Reg D is 506C and 506B, right? What do 506C? That means you have to use a third party to verify if that credit investor or not. Yeah. And then you do that, and there's limitation. So the biggest problem is if you sell, the syndication is the same with everything else. Private equity, private real estate is all the same. But the problem with tokenization is, can you imagine this? I sell my things through Reg D or Reg S. Now you hold the token. If you have a regular token, you can sell the token anytime you want, and peer to peer, right? Whether it's exchange or not, you can put it on DIDEX, you can put it on anywhere, you can sell it. But that's actually breaking the law, right? Because the law says if I sell token to you, let's say if a Reg D investor, you cannot sell your shares within 90 days to anybody. And then after 90 days, you can sell your share to another credit investor, but you cannot sell to a non-credit investor until 12 months later. So I, as a sponsor, have to somehow, limit your ability to sell to make sure everything's compliant. Is for the benefit of both you and me, you as an investor and me as a sponsor. And there are a lot of tokens, like you just issue a native token like ERC-20, you can't do that because the technology is so advanced, they're so decentralized, nobody has control over it. Yeah. The law is not updated yet. The law says, hey, you can't do that. We want to control this. We want to know who the shareholders are. I want to know that if they can't just transfer to anybody who's, say, on an AML list, right, who's a terrorist or something. Yeah. So IRS also want to know who the shareholders are so they can tax them. So we have to basically put restrictions on existing technology to pull it back, so make sure they're actually in compliance with current security laws. So we need that, right? So the Reg D, Reg F that did, I was able to put restrictions on different tranches. It's the same token, but I was able to create different tranches under each, under the same token, but each tranche would have different restrictions. Say, for example, Reg S investors, their tokens are unlimited. They can trade it peer to peer. They can do whatever they want. There's no holding period. There's no lockup. Yeah. However, they can now sell to your US investor within 12 months. And that's one of the biggest problem why most sponsors I know, I personally never done it before as well, is to sell to foreign investors because you can't control them, right? You can't say, hey, you can't sell this share to anybody else. You can't do that. They don't listen to you, right? Then if they do that, then you're breaking the law. So I now are able to actually put restrictions on their tokens. Goes, you can trade it freely peer to peer, but you cannot sell your tokens to US investors. How to do that is I KYC everyone. Yeah. Everyone have to be KYC and then touch the wallets to KYC ID, and there's I will upload that in the blockchain. Now it's all decentralized after that. So you can try to transfer. If the recipient is a US citizen, you will fail. If they're not, you'll success. Right. Yeah. So we're able to add more layers of restrictions on those smart contracts and make sure they're in compliance, which I don't like it, by the way. I was hoping the law would update and that will make it better, but no, we have to do that right now to stay in compliance. Yeah,
I mean, not in the short term, right? But there are Ethereum standards that you can use to help enforce that. I don't know if you messed around. I think it's Ethereum. What is it? 3446 might be or 7.
There are different standards you can use. There's we actually customize our smart contract based off the 1400.
So you're doing the
okay. There's 1400. There's 1401. There's actually you can use the I think 1.15 as well. 1.55. I forgot it is. And then I was talking. Okay, everyone has different standards. It's based on their preference. And then I've talked to Securitize and T0. They also tokenize too. They use different standards as well. But we researched all different standards with my tech team. We found out 1400 give us the most flexibilities to customize. So we go with that, then we customize on top of that.
Okay. And you said you issued your own security token for your company. Is that right?
Yeah. So the token we have right now is called the USP token, United States Property Token. That's the token for the platform and also for the real estate. So the platform issued the token, which is a share of the company. The company consists of the platform, the tech part, also the real estate part. So both.
Yeah.
I didn't issue different tokens for like a real estate for a platform. I didn't separate them, just one token.
So you have a property token for the property, and then you have a company token for the company?
No, it's the same. I did not separate it. So if you bought the token, you will essentially own the property that's underlying assets. Also, you will own the tech part, the tech platform where you will have better growth.
Yeah, I think this is a tokenized REIT then, or a tokenized fund?
We're not a tokenized REIT or tokenized fund. So it's a C corp, it's a corporation, right? Each token represents a common share in a corporation. Now, corporation now has two lines of business, right? It's like the main line of business is the technology part, is the platform where where we can help other people tokenize their real estate and then and allow people to buy them. So we make money from technology fees, from profit shares, from all that, right? And then maintenance fee of technology. That's just like T0 or the other tokenization platforms. Now, I also tokenized my own real estate. That's why I put in $52 million worth of real estate on my platform. I'm the first clients of my own platforms. But because I contributed those properties, so whoever buys the token, and then they also owns those fractional ownership of those property too. So imagine it's like a tech company, but the proceeds are used to buy property. So they have a lot of assets instead of asset light technology company. They're asset heavy. Most of the assets are in the real estate. So I like to make it similar, not exactly the same. MicroStrategy, right? They're the biggest Bitcoin holder.
Bitcoin. I think BlackRock might have surpassed them, but maybe not.
Maybe. So, but BlackRock has an ETF, right? They're not ETF. So they're actually a software company. The main business is software. But when they make money from the main business, they use the proceeds instead of investing in their own business. They go, hey, let's buy more Bitcoin, right? So Bitcoin is their assets, but then the main business actually is generating, income from the software sales. So the more money they make from the software business, then the more Bitcoin they buy. So I like to buy MicroStrategy myself better than Bitcoin ETF is because they actually make money from their operations, then they'll buy more Bitcoin. So over time, I will actually own more Bitcoins, and versus if I just bought Bitcoin ETF, I own the same amount of Bitcoin, right? So, and the same thing is my USP, right? So the tech platform actually would make money from the technology fees, from all these other profit shares we'll make from those tokenization process. Then the money we make will go use to buy more property. So we actually own properties, we'll also help other people to tokenize their properties. That's how I design my company.
Okay. And then, but you only have one token. So how do you value the individual properties, or are they all thrown into a basket, whether they're your own properties or not? They're all thrown into a basket, and the value of your USP token reflects all of the values of everything that's in there.
Yes, you're right. It's like a REIT, except it's REIT plus a technology platform, right? So the value of the token is combination of the whole basket of the property portfolios plus the technology part. So it's kind of hard to put a fair value on there because everybody value it differently, right? So you might think the technology part worth $1. You might think the real estate worth $1. So that makes for you just $2. And some people might like kind of way better to go, but I'm going to value at $2, right? For you to worth $3. You just don't know, right? For the real estate, it's easy, right? You can look at the income, you can look at the appraisal. It's easy to value it.
Totally.
Technology part is the part that is everybody's opinion is different.
So, I know. I mean, to value what we're doing is a lot easier, very much so. But you've got a tokenized REIT, so somebody's got to look at all the properties in there and say, I think this token's worth X.
Yes. Yeah, that actually is good or bad, right? So for not sophisticated investors, it's hard for them to put a fair value on there. But for sophisticated investors, there's an opportunity to trade, right? Because now everyone's opinion is different, right? But our platform also help other real estate sponsor tokenize their projects. So that's easy to value because you can just value the real estate pretty easy. And that we can basically issue a token per property.
Oh, you can. But it's not related to USP then?
No, it's not.
Yeah.
So we'll be able to help them issue new tokens on our platforms and make sure everything is compliant, of course, then sell it to our users on the platform.
Yeah, because that's what SmartBlocks does, is that every property's got its own token. SmartBlocks, the company, doesn't have a token yet. That was more of an exit strategy for what we're going to do there. So interesting, though.
Okay.
I actually really thought about going the REIT route, the tokenized REIT route, because I think that is it's an easier solution, because then you only have one token trading. But then how would you get other people to put their properties in there?
I did it myself. I had the same problem, right?
Yeah.
I did it myself. But throughout the journey, though, I've got a lot of other developer friends goes, hey, can you help me do mine? I'm like, hold on, let me do mine first. Then once I go through the process, make sure I can do it, then I can help you, because I don't want to do something wrong to them.
And we've done it. It's the legal thing has been figured out, thank God. I mean, there's been people, I'm sure you spent a lot of money figuring out the legal side, but you can do it relatively inexpensively with the Reg D and a Reg S. If it's under 5 million, a Reg CF. But there's a lot of people that spend a lot of money figuring how to get around these security laws with the current regulations that are in place, which are really exemptions, if you really think about it.
Yes, they're exemptions.
So if you're talking to other developers about tokenization, why do you tell them, hey, here are the benefits of tokenizing versus just doing it the traditional way? What are like the top 3 things that you tell them?
Well, so that's the problem why you don't see tokenization industry booming, right? Because if you come to me, if I don't know that I don't own USP, if I just a regular developer, property investor, or REIT operator, I see no benefit of tokenizing my shares, right? It's complex. It adds more cost to maintain the smart contract, everything. I don't see benefits, right? However, that's why I'm creating this ecosystem on my platform. That's why I turn this into a platform. I have users. So basically, I'm like a platform I can give you investors, right? Yeah. Not just domestic, but foreign investors. So this is a place where you can raise money. That's what interests you. If you're a syndicator, if you're a sponsor, all you want to know is, hey, do you have an investor or not? I don't care about your technology. Do you have an investor? Can you help me find an investor? Well, that's the thing they care the most. So what I will tell them is, I have users that are actually actively investing, right? So come to my platform to list your project, whether tokenized or not. You will have users look at your projects. That's the person they care about, right? Second thing is, now they want to automate things. there people out there pay. I think Jupiter Square charge $15,000 to $20,000 to white label their products, where allow sponsor to do Reg D online, but also automate everything, right? The signing, the review of the project, the registration, everything, the document management, investor management. They provide the software just for that. They charge $10,000, $15,000, $20,000 to do that.
Yeah.
Well, on my platform, I charge $10,000, and you can do all that plus tokenize your property, give you investor option to trade it peer to peer after they bought it. So yes, right now there's no big market for secondary trading, but eventually there will be. At least they have option. They have option to trade it peer to peer after they bought it. Previously, they don't, right? So that's what I tell people is I have investors, I have technology to make your fundraising process easier. And then I give you a better story to tell your investor where, hey, you invest in my projects, you have the option to get the token so you can trade it peer to peer afterwards. But everything else is the same.
Yeah. So the $10,000, does that include the legal side, the Reg D, Reg S?
No, that's just technology fee, right? The legal side, they have to have their own attorneys. But a lot of people do already have that side. You know, they sponsor, experienced sponsor already did it.
They have to add
disclosures.
The tokenization language.
Disclosures, yeah, which I can give to them, right? That's just a template. And their disclosure to them, but they already have probably a lot of template they use from their previous raise. They don't, I have mine too, but they have to get a turn to review at the end. I don't offer legal service here.
Yep. Okay. I mean, if you go to like a WeFunder or Smart, what's it called? Start Engine, they do it all for you. You just sign. That's kind of
but they charge. They charge a lot of fees, right? You still have to get a legal attorney that they recommend you to hire. And you have to do audits, and then they give you the documents. Right. They give you the documents, and then you still have to pay it, right? And then I think it's $10,000 I paid for Republic. Then they charge a percentage of your money raised. We don't do that, so it's a lot cheaper to do on our side. We don't charge a percentage to raise money.
Well, you're probably not a security broker either. You probably couldn't.
I could because I own a broker dealer. Right. I don't know if you know this. I own a broker dealer on the side. So if I wanted to, I could do that because I could have my broker dealer sponsor this raise, and then we just charge a fee on that. They go through my broker dealer. Of course, this company doesn't have a broker dealer license. We can't do it, but I own one separately. Of course,
you can route it through there. Yeah.
I can talk to my partner and then ask her to do it, and she wouldn't just do it. But there's no point to do it. I'm not trying to be a broker dealer here. Republic WeFounder or starting. They're a funding portal. That's what they do. They charge percentage for the raise. That's what they do for a living. I'm not doing that. I'm trying to be a platform to allow people to enable people to basically find deals to trade. But I don't charge a percentage. I just charge a flat fee of technology fee.
Yep. Okay. Is there, I mean, the investor side's obvious. I think you wrote, and I like this line, I use a different line, but you wrote, I want everyone to be a landlord. It's so true. If you look at the stats, 80% of millennials and Gen Z can't afford real estate. And I remember my 20s, it took me till I was like 28 to buy my first property because I couldn't afford it either. And it's far more expensive now relative to incomes than it was back then. You need bigger down payments. Everything is more difficult. But what you're offering is a way for anyone to become either a landlord, as you say, or an investor in real estate. And if you continue with that trend over time, you will have enough passive income. I like to say 7 to 10 years, just investing $1,000 a month, reinvesting all of the dividends back into the platform as well as any sales, you'll have a $20,000 a month passive income within 10 years. And we've done the math over and over again. So from the investor point of view, it's a no-brainer. And it's far safer than crypto. It's far more lucrative in the long run. Yes, I mean, you might, if you hold on to Bitcoin, it's a wild ride. It might go way up. It might not. I look at Ethereum the same way, which are the only two cryptos I'll even touch. And Ripple. I like Ripple as well. But when you get into real estate, I mean, these are real assets that over time historically have proven to go up, and you get cash flow. You're not getting that from Bitcoin or Ethereum unless you're staking it, and that staking is usually a very low amount.
So I mean, I'll say I totally agree with you, and then I'll add to that is I think I'm reading quote like 90% of millionaire became a millionaire because of real estate. So
Yeah.
yeah, most people can't afford it, but when they can afford it, they become a millionaire, right? That's the wealth. Real estate is one of the best wealth generator. What is this technology of tokenization? Now a lot of people get in real estate earlier with no barrier to entry, plus give a liquidity they never had before. I think that's a future trend. I mean, Larry Fink of BlackRock keeps saying that
Yes.
tokenization is the next gen of the markets. And then I think that's going to change the entire real estate game, allow everybody to basically on an equal field to invest in real estate. And I'll add to that is the reason why I think real estate is best is it's this uncertainty, right? People need real estate. It's like commodity. You need real estate because you are living in real estate when you're in the office, when you're the home to live, when you land your farm, when you know, like everything comes from real estate, water comes from real estate, right? But we don't need gold, right? Though gold is not necessary accessory need to have. We don't need Bitcoin. We don't need Ethereum. We don't need any of that. I mean, they're not absolutely necessary commodity you need. Yes, it's better to have them and make your life easier, but it's not necessary. So in my opinion, real estate give you the certainty that no other asset has. It's like 50 years from now, I know real estate is still going to be there because I don't think we're going to move to Mars yet. Right? Even Mars still you have real estate in Mars, right? So, but 50 years from now, I'm not sure Bitcoin is going to be around. I'm not sure if Ethereum is going to be around. There could be bad technology out there, just like, you know, and just replace them. Or somebody might figure out a hole in the code and crack them down. You know, I don't know, right? I do like them now, but I'm not sure the certainty in the long run. So I like to look at things in the long run. So real estate is definitely the best investment in the long run.
If you look at what the U.S. is trying to do with CDBCs, which should never pass, don't ever vote for this. But if they did, you know, that's going to usurp Bitcoin in a lot of ways. I know that people will say that's BS, but the U.S. doesn't want to lose its dominance globally as the reserve currency of choice. If they feel threatened by Bitcoin, believe me, they can do things to shut this thing down quite easily. And I'm pretty sure that they've already cracked the 256K encryption. And they could wreak havoc on the system. Now, I've heard from other people, yeah, if that happens, we'll detect it and we'll make it even more secure. But you know, it's probably not a game that anyone wants to play. So if Bitcoin gets too threatening, who knows? Even with the institutions buying in, which is it's a safer thing to do with it when you got institutions buying in. But still, like you said, you never know what's going to happen. Real estate's always going to be there. It's a far safer bet and a very lucrative one. If you look at real estate versus the S&P over the last 30 years, real estate beats it every time. So it's just it's a boring, it's not the most exciting.
Well, this is an asset that you can use as utilities, right? You can live in there, right? You can live in there, you can rent them out. Well, you can't live in Bitcoin, you know. There's so you can't live in anything else. So in my opinion, like I'm with you. Like real estate is just the best, and then I just wish more people can have access to it.
Yep, I do too. But we're going to provide that. So Johnney, it was a pleasure talking to you. We got to have you back when things get heated up here because it's going to turn a corner. We're all going to cross the chasm, and this is going to be a crazy, crazy time.
Okay, thank you. Thank you for having me, Mark.
Thank you.
If you've had the problems with banks and inflation and anything having to do with the US dollar or any currency around the world for that matter, you know how important crypto can be, but it's got to be the right crypto. So our friends at Tetragard have decided to create what's probably generally considered an ETF with 3 tokens, Bitcoin, Ethereum, and PaxG. They've wrapped it all up with a rewards token that's built in, and it's easy to buy. It's really quick at the website here. Now, the best part is you're getting rewards while owning this, and therefore you're making money just by holding onto it. How could you go wrong with this? Why would you buy Bitcoin, PaxG, or Ethereum separately when you can get them all wrapped together at the lowest prices with a rewards token built in? I can't think of a reason why. Can you?